Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is Thursday, April 23rd, the day of the NFL Draft. So, a couple hours to go. I'm looking forward to seeing where all the teams pick. I am a Giants fan, so we do pick number 4, but I've got very low expectations. Every year I watch this with some buddies from high school, and every year I come away very disappointed. What I want the Giants to do, I'll talk football just for a second here, is I would love to see them trade down. We need a whole bunch of players. I would love to see them trade down and get a whole bunch of picks, get a couple linemen rather than pick a lineman at number 4. So we'll see what happens. I'm sure that I will be disappointed. That's what happens every year. But regardless, very happy to see at a sporting event, something that I love to watch the clips of the players as they get taken and so forth, and to see, basically how these GMs and coaches, position and who's going to position themselves for next year. So, position themselves well, I should say, for next year. So very excited for the draft tonight. All right, let's talk about the market today. Well, some little bit nasty price action during the middle of the day. There was a rumor. I'm not really going to go into the story about Gilead because I don't know if it's true, and it's rumors. The one thing that I would point out is the overall market reaction, right? It's one thing for Gilead to move down on that, whether or not this study is true or not, or holds any weight, but the reaction to the overall market was something else. So it kind of tells you, it kind of gives you a little bit of a hint where this market is in terms of looking and maybe pricing in at some point, or pricing in a little bit that some of these companies have made some advances in terms of a vaccine. So when one of these companies goes down, like Gilead, on a study not working well, the whole market went down. Now there's a couple observations to note here, and this is what we talked about in the trading room. By the way, Intel trading down a couple bucks here in the aftermarket. I thought their quarter was relatively fine. I did not play that name, but let's go through the technicals, because the technicals gave us a really good clue as to whether or not to be adding risk today, and basically where to be doing it. And again, that's the beauty of what we're doing on a day-to-day basis is we're basically looking for levels where there's a good risk to reward setup. That's really what trading is all about, because you don't want to be adding after we've had a couple days of strength in a non-trending market, right? You want to be buying a little bit of the dips and where it's smart to trade against support, but chasing right now in this market is tough to do, and that's really where the market webs, which is the indicator that I use on my screen, it really helps us, right? And we've been using that extensively in the room. So, number one, the main observation that people may have gotten lost here in the last week or so is that we really haven't gone anywhere. We obviously made this nice move up, and we started to go a little bit higher. Then we started to test the lower boundary of this, and so this is a great level, 27.31. I see a bunch of people, on various different. I get a lot of email reports, and they're talking about fib levels and things like that. Very few look at what's known as valuating price, right? So what we're doing with this indicator is we're weighting price, volume, and time, and that gives us some exceptional support and resistance levels. It just is what it is. It really does. And this 27.31 has been a great line in the sand, because I see a lot of people, as I talked about earlier in the week, they draw a trend line and they're like, oh, we broke the trend line, we're going immediately down. Well, clearly they don't have the market webs indicator on their on their screen, and to tell them that we have support here at 27.31. Now the question is, will that support hold? Well, we don't know, and that's why you kind of be careful around that support, and you look for a little bit of confirmation. Here's where it's really shed some light, and this is what we said in the room earlier today. So if you go into my commentary page, which is in Slack, right? We use Slack in the Tribeca Trade Group room because it's the best thing out there. That's why I use it, and it really allows me to kind of organize thoughts for the day. But I said this today at 11 o'clock. I said, S&P is up 1.4% in the day. In my opinion, anything up there is extra. We've made a very nice move in the last 2 days. Don't be super greedy. And I put this as a freebie on Twitter as well. But that's where we were right before, as everything was looking fine. And then of course we had that volatility with that news. So all in all, we really didn't do that much today. We're down 10 basis points. So I know it looks dramatic when you're in the heat of the moment and you saw the move from the highs to the lows, but this gave us a really good level to trade against. So here, good risk to return, once we started to move off of this level, right, and there was confirmation that this support level was going to hold, here's a better level to be adding risk, provided that you are disciplined and realize that this is your support level, that if we break below, you want to use that as your stop in trades. But here's where we bounced, and then here's not a place to really start to go long or add a lot of new risk. And that's basically what it comes down to. Now, again, this is the S&P 500. It doesn't look like every single name out there, but what we're doing, what I'm doing, is always starting with the overall, taking a top-down approach. So looking at the big indices first, seeing if they're strong or weak, and then from there, making some determination about whether I want to be adding a lot of risk in single names and analyzing those single names, on an individual basis. But really, this kind of gives me like a temperature gauge of what I want to be doing in terms of, really like pressing down the accelerator in terms of adding risk, or when I want to be taking my foot off the accelerator and almost having like your foot on the brake. And at the top of the value area after a nice 2-day move is kind of definitely where I want to be lifting my foot off. So the accelerator. So that's why I said this today at 11 o'clock. And that was a pretty good job, I think, overall. So I am giving myself a pat on the back here. What else? And then kind of just looking at some other trades. I still have some Facebook on. TLT, I think, is starting to get interesting. I've mentioned that TLT, there really hasn't been a signal here in the last week or so. It's been kind of grinding higher, but not with any major momentum to it. So it is above value, but it's been rather slow moving. You could see the size of the body of the candles versus where we were back here, right? So this is where it was much more fun to be trading bonds. Here it's not, when you have these little tiny moves for the day, and most of the move happening in the overnight market, not so great to be trading it in terms of day trading, right, or even short-term swings. All right, so that's kind of the overall market view. So that kind of is a recap for today and how I traded. Where do we go next? I really don't have a clue. I think that, and again, I don't mind mentioning that. So many people have opinions and they try to make predictions. This is a decision area, and it's kind of, we've been hanging here for the last week and a half. So if you've got a crystal ball and you know which way we're going to go here, congratulations to you. But I think you just kind of have to be mindful of your risk in here. And to not, if you've had a nice month, right? We're getting close to now the end of the month, and I've had a particularly good month, and I don't think, unless I start to see a really good signal, and I would say something, what I would be looking for at this point is either for us to maybe return back to the bottom of value, or to punch out further. But I don't know. I'm thinking that this market, again, I always have an opinion, but I'll use the technicals, right, to verify my opinion. But I think, the rubber band got stretched too far on the downside. As I bring this up, right, the rubber band got too far stretched to the downside, and now it is snapped back. But now what are we going to do? After we've kind of retraced this, and again, this is showing up. There's not it's not a coincidence why we've paused here. If we go to the weekly chart, we're also showing that we're kind of hanging out at the bottom of value. Now, again, Nasdaq looks a little bit different, but the Nasdaq is a little. If you look at some of these ratio charts, this is one that we talked about on Friday was IWM versus Qs. So just about a week ago we talked about this, and this is also pretty stretched. So I would like to see IWM outperform a little bit more, and some of these growth names take a little bit of a break so that they don't get super heated. Right? We've seen that a couple times now where this was just a couple days ago where a lot of the software names and so forth went down, and they got hit pretty hard. Now, some of them made a really nice recovery. Where did TTD end up today? This was a name that I kind of missed out on, but this is now back above value. Didn't close on the highs, but certainly had made a nice move, out of here. So some of this group is getting crowded, I would say, but it's to the level of I'm not sure, if we're at full tilt crowded at this point. And you could look at this in terms of value and growth too. That's another way that I like to kind of slice and dice this. If you want to let's look at large cap, IWD versus IWF. It's concerning, right? That growth has outperformed so much to value. If it was just a little bit of outperformance, I would say fine, but it's concerning to me over the last 5 years basically that growth is this far out of whack between value. So it is concerning to me, and if I'm concerned, what do? I try to trade a little bit less risk, and I get out of trades pretty quickly if they're not working. And that's basically what happened to me a little bit. So if I go to trades, right, again, I always show you all the trades that I do. We traded some Zoom today. I got out of this pretty quickly. I know some traders in the room. I mean, this thing went up to 169. I think I got out at 160. I got in around 157, and I think I got out around 161 and a half. But this thing closed on the absolute highs today. So, then of course, just like going through the analysis of the S&P, you could still find some of these stocks, but it's going through the technicals of the S&P and the indices and some of the internals tell me how much risk I want to deploy, right? How many trades I want to have on. I tried CTSX. I'm still holding some of that trade. I did take a target in this one. Tough to really see a signal here on the daily chart, but if you zoom in to the 5 minute, you could see that there was 2 VPOCs taken out here. There should be another one here. Oh, maybe this one wasn't one. Again, version point of controls, which is this gray line. When price doesn't go through this, it leaves a version point of control. So one of these was taken out here. And then on the 1 hour, you're going to see that there was a nice level to trade off of 2. Which was right here, 140. Right, so that's what I took this morning. I got a nice bounce. I took a target, and I may re-add that target as long as this holds here in Citrix. So what else did we do today? Just rounding out. The couple earnings trades have been really nice. I took off the earnings trade for Netflix today. This was really nice. This was a iron condor. Someone said to me on Twitter, I had tweeted out something else about Netflix, and they're like, "Oh, well, this really killed really burned all the premium on the call side and the put side." Well, you don't have to trade outright. That's the beauty of trading options. A lot of times for earnings, the best trade is to sell premium. If you're not familiar with that, then you probably shouldn't be trading options. If you don't understand the principles of how much the option premium is inflated on earnings day, this gave a great sense. Remember, they were implying a 13% move for earnings for Netflix. Netflix does not normally move that much. So what did I do? I sold premium. I sold the call spread, sold the put spread, and I covered that trade. On the put side today, I bought back a short put spread for 70 cents, and I sold that for 470. So I hate that argument. I see that a lot. Oh, this is just killing all the premium. Well, trade it that way then. There's various, an iron condor is a great way to trade it, but I get so tired of people thinking that the market is rigged or it's rigged against them. You could do any trade that you want to take advantage. If you think it's rigged, then trade it that way. It's very simple. We also did this for Domino's. I didn't think that Domino's was going to move much. I thought that it was basically priced in, considering the move that DPZ made. And this, by the way, fell down to support today and held. That's on the 1 hour chart. So I did the same trade. I sold the call spread, sold the put spread. I managed to take that whole trade off tomorrow. I don't like to manage these things on the last day into expiration, but I bought back the call spread for 30 cents. I sold that for 230, and I bought back the put spread. Or excuse me, I bought back the. This should be the call spread. No, this should be the put spread. I think I must have mistyped this. This is the put spread. Yeah, so this whole trade, I bought this whole trade, both the call spread and the put spread together, back at $1.10, and I sold this for 460. So that's a pretty nice trade for one day. What else did we do today? I talked about Citrix. Again, I like to go over the trades that didn't work. So as I'm talking about value versus growth, I'm trying to look particularly for value trades here. One of the trades that I tried was GM today. There was a headline about workers possibly going back to work, but it just fizzled today. So I did trade out of that one for a small loss. But again, that's kind of where my head is at, is trying to be open to looking for some more value names. Oops. And get out of that. Tesla, also was looking for Tesla to kind of move all day, and unfortunately it broke the wrong way. And it's trading right back basically below value. So I got out of this trade, moving on to something else. So again, good example, right? I was talking about using the 1 hour value area with the S&P. Same thing here. Tesla made a move inside value. However, it just basically stalled out here at the point of control and faded. So I got stopped out, I think, around 713 or something like that in this trade, which I was not happy about. 711, worse. But listen, it happens. And again, that's more of like a paper cut loss. It's probably a little bit more than a paper cut loss, but listen, this is all about trading, right? Some winning trades, some losing trades. Nobody has all winning trades. I know Twitter thinks differently. Everybody on Twitter has all winning trades. Microsoft too. I traded a little bit of Microsoft, and then ended up selling the balance for about cost. So not such a great trade either there too. So it was a little bit of a frustrating tape. And again, that's how things are going to be some days. APT, there was a story about this name that basically they won a contract. I think it was like a $700 million contract. This was a name that a couple of traders were looking at APT in the room. 1 hour value area as well, has basically failed here once, twice, 3, 4, 5, 6, maybe 7 times the charm. So I did take a target in this one, and I'm leaving some on, to see if this thing can get out of this range, because that's a pretty tight value area. Notice as well, this value area is inside this one, which kind of means that it's a little bit coiled up, like a spring. So I did take some money off the table there, 1443, 1397. So that was a little nice trade. All right, guys. So that's it. And as I've been saying, like every day this week, in this range, take it one day at a time and realize where the places where I want to add risk versus being a little bit defensive. So I know you probably hear, like if you're a regular listener, you hear me talk about being defensive a lot, but I think in this tape and what the situation that we've got on right now, I've been acting more defensive than I usually am, but yet I'm still doing pretty good at making money because the market is giving us some good volatility. Speaking of volatility, let's look at where the VIX is, and that'll be our last thing in credit spreads, which I like to look at and show you guys every couple of days in the room. But the VIX, not any crazy move today, but it did come off the lows, because I think at one point today it was about 39 in the VIX, and it's back above 41. It's below all these short-term moving averages. So I don't think you could really say anything if you're. I don't think there's a very bullish or bearish signal yet in the VIX. I think this is kind of in the decision area, just like we're seeing with bonds and with S&P. So probably a decent move is going to happen one way or another, but I think you kind of have to just be patient and wait for it and not get over positioned until you see the signal first. And here's credit spreads. That's the last thing I was going to show, because this is a great gauge of how the fixed income market is perceiving risk right now. We did see this bounce in credit spreads, meaning credit spreads were widening, which is a measure of risk off when credit spreads are widening, but they've kind of come in a little bit. So might be making another lower high here. Again, a little bit too early to determine that. All right, guys, have a great night, and go Giants tonight. See you guys tomorrow.